The current live price for Opendoor Technologies Inc., NASDAQ Open, is $7.79, reflecting a significant intraday gain of 10.07%. Today's trading has seen a high of $8.24 and a low of $7.31, with volume surging to over 107 million shares already, a figure that is already substantially higher than its recent averages. This kind of explosive upward movement, especially on no immediate breaking news, is the kind of thing that makes you sit up and take notice. The surface-level narrative, and what most casual onlookers will assume, is that this is simply another bout of meme stock fervor, a continuation of the speculative trading that has defined its past. After a dramatic run and a recent pullback, the expectation is that the stock is just bouncing around, disconnected from its underlying fundamentals, a plaything for the retail crowd. But that's a facile explanation. The reality is more complex and far more interesting. Today's action feels different because it's happening in the quiet aftermath of a major leadership change and a strategic reset that has gone largely unappreciated by the broader market. It's not just a surge of sentiment, it's a reevaluation, a quiet understanding starting to form that the company's new direction might actually have legs. The tension here is between the loud, speculative noise of the past and the subtle, deliberate actions of the present. This isn't just a stock jumping, it's a signal that a different kind of investment conversation is beginning to happen around Opendoor. The prevailing market belief is that Opendoor's business model is inherently flawed, a capital-intensive operation that is extremely vulnerable to real estate market fluctuations and has never consistently delivered profitability. The company buys houses with its own capital, holds them as inventory, and then hopes to resell them quickly for a small profit. In a period of high mortgage rates and a slowing housing market, this model gets squeezed from both ends. It's harder to acquire homes at a good price, and it's even more difficult to sell them before holding costs eat away at any potential margin. The expectation, therefore, is that Opendoor is a perpetual work in progress, a great idea in theory, but a terrible stock in practice. And for a long time, that expectation was reality. The stock fell off a cliff, bottoming out well below $1. But a contrarian viewpoint is emerging, one that suggests the new leadership is not only aware of these problems, but is actively and aggressively addressing them. The recent appointment of a new CEO, Kaz Nejatan, formerly of Shopify, and the return of co-founders to the board is a massive shift. This isn't just a new face, it's a new philosophy. The talk now isn't just about scaling the iBuying model, but about transitioning to a more capital-light approach. This could involve an agent partnership model or new services that don't require Opendoor to hold a vast and risky inventory of homes on its balance sheet. This new reality is what the market is just beginning to price in, and the intraday move is a reflection of that shift in perspective. It's a quiet nod from institutional and sophisticated investors that something fundamental has changed in the DNA of the company. It's not just what Opendoor does, but how it's going to do it differently. Looking at the recent stock movement, the sheer volatility stands out. The stock has been on a wild ride, and this kind of daily swing, even on days without major news, speaks to the high beta and speculative nature of the name. Opendoor has been a darling of the retail investment crowd, particularly since its dramatic rise from its lows. The high volume today confirms that there's significant participation, both from those who are riding the momentum and those who might be starting to accumulate a position based on the new management narrative. Last week, the stock experienced a significant pullback after a strong run that saw it hit new 52-week highs. This kind of two steps forward, one step back movement is common for stocks in a turnaround story. The initial surge was likely fueled by the excitement of the new CEO announcement and the return of the founders. The subsequent drop was likely a combination of profit-taking and a general shift of funds towards other hot sectors, like AI stocks, which have been dominating the news cycle. Today's bounce shows that the appetite for this specific story is far from gone. It suggests that the recent dip was seen by many as a buying opportunity rather than a sign of a failed recovery. When you see a stock with this much volume and this much intraday momentum, it's a clear indicator that a battle between buyers and sellers is underway, and for now, the buyers are winning. This is the kind of situation that sophisticated traders and platforms like Interactive Brokers and Fidelity Investments are watching closely, as the flow of capital and the price action can provide valuable clues about the underlying conviction of the market. It's a dynamic, moment-to-moment game of chess, and Opendoor is right in the middle of it. Now, it's important to understand the business on a fundamental level to appreciate what is and isn't working. At its core, Opendoor is an iBuyer. The company uses technology and data-driven algorithms to make instant cash offers on homes. If the seller accepts, Opendoor buys the home, often makes minor repairs, and then relists it. The entire premise is to provide convenience, speed, and certainty to a homeowner who wants to sell quickly without the hassle of traditional showings, open houses, and negotiations. The revenue comes from the service fee charged to the seller and the resale of the property. For a long time, the expectation was that this model was a license to print money. The reality was a bit different. The iBuying business is incredibly difficult to manage. It's a low-margin, high-volume operation that is susceptible to economic headwinds. When the real estate market is booming, the model can work, as the company benefits from rising home prices and quick turnover. When the market cools, as it has in the current environment, the company gets stuck with inventory, which drives up holding costs and leads to losses. Recent reports have shown the company posting a positive adjusted EBITDA in some quarters, but overall it has continued to burn cash. This is the core conflict that has plagued the company and its stock. It's the constant tension between the promise of a transformed real estate industry and the harsh realities of a business that is at the mercy of macroeconomic forces. The new leadership, however, seems to have a new plan. They are not simply trying to execute the same old strategy better. The new CEO and the co-founders are signaling a significant strategic pivot. The goal is to make the business more resilient, less dependent on the full cycle of home buying and reselling. This could mean a more robust focus on their mortgage services or other financial products that might not necessarily require Opendoor to hold a vast and risky inventory of homes on its balance sheet. This new reality is what the market is just beginning to price in, and the intraday move is a reflection of that shift in perspective. It's a quiet nod from institutional and sophisticated investors that something fundamental has changed in the DNA of the company. It's not just what Opendoor does, but how it's going to do it differently. As we look ahead, there are a few key catalysts and risks to consider. The most important near-term catalyst will be the company's next earnings report. The market will be paying very close attention to any color or guidance provided by the new leadership team. They will want to see if the new strategy is already starting to take hold and if the company can continue to improve its operational efficiency. The market will be looking for a clear path to sustainable profitability, not just another quarter of adjusted EBITDA that masks a net loss. This is the ultimate test of the new management team. Additionally, the broader housing market is a huge factor. Any signs of a change in interest rates or a shift in housing market dynamics will have a direct and immediate impact on Opendoor. If mortgage rates start to decline, it could provide a significant tailwind for the business, as it would likely increase transaction volume and improve margins. Conversely, if rates continue to climb, it will make their path to profitability even more challenging. The company's ability to reduce costs and manage its inventory effectively in a tough market will be crucial. The fact that the stock is now trading with this level of momentum suggests that investors are willing to bet on the new leadership's ability to execute, but that doesn't eliminate the risk. The company still has a lot to prove. The future of Opendoor stock is a clear example of the tension between an old narrative and a new one. The old narrative says the company has failed experiment, an iBuyer that can't survive a down market. The new narrative, fueled by the change in leadership and strategic shift, suggests that it is a phoenix rising from the ashes, a company that has learned from its mistakes and is now on a better, more sustainable path. Which one will prevail? That remains to be seen. But the action in the stock today, with its explosive upward movement, tells you that for the first time in a long time, the market is starting to believe the new narrative. It's the kind of high-stakes play that brings out both individual brokerage investors and professional traders, all looking for a new angle on an old story. I'm curious to hear your thoughts. Comment below, do you think the recent leadership change is enough to fix the fundamental issues at Opendoor, or is this just another speculative rally? Do you think the company can make a meaningful transition to a more capital-light model? It's a crucial question because the answer will ultimately determine if this stock is a long-term winner or just a short-term trading vehicle. The outcome will be a powerful lesson in how a shift in management and strategy can completely reframe a company's outlook. This is a story that is very much still being written, and today's action is a fascinating new chapter.